here we go. The Russell 2000. Can't see it right here, but it is on track for its second straight record. There it is. Second straight record close. Fifth win for the year. Any gain will do it, and you can see it is rising 21 points or nearly 1%. Dow is a little weak here. S&P and NASDAQ in the green. Meta is making news again at this hour on its new plan to invest more than $1 billion to build a data center in El Paso, Texas. Our countdown closer says Meta is the pick he likes the best for the AI play. Joining me now, retirement income source partner Jeffrey Small. Jeffrey, listen, Meta needs way more capacity, just like all the other companies that have made their big announcements over the last couple of weeks. So much of this is driven by OpenAI. This one is not. That's interesting, isn't it?
You know, it really is, Liz. This is their 29th facility. So they've got 29 facilities equal to the plant that they just announced that they're building in Texas. And so they obviously need all of this storage and all of these data centers for their plans in the future.
Yeah, we were just showing, and maybe we can do it again, that Meta is a little bit different in that it is sort of marching to the beat of a different drum compared to all of these other Oracle, Salesforce, CoreWeave, Broadcom, NVIDIA, AMD, Samsung, striking deals with that one load-bearing wall that has been OpenAI. Is part of the reason you like Meta because it is thinking differently and moving a little bit differently here?
Well, the good news is, Liz, that Meta has the free cash flow to invest. They're a phenomenally successful global mega big tech company. And so since they have the free cash flow to invest, they're following the herd. Nobody wants to miss out on the future, even though, you know, we're investing trillions of dollars in AI, and nobody really knows if the tech truly is ready. We're hoping it morphs into something that's going to be fundamentally positive on the bottom line.
I would say, though, that it was a couple of months ago, I think, that Mark Zuckerberg told President Trump that he was going to spend something like $600 billion over the next couple of years, which is a heck of a lot of money. I was just checking their cash position on their balance sheet, and it is about total cash $47 billion. So the math is a little mathy, not mathy. I don't know, you know that term. The math isn't mathy enough, but how does that work?
Well, you know, they've got about 50 to 60 billion of free cash flow per year, so they're obviously not dumping in 600 billion in 1 year, you know, but we are going to see massive amounts of money being spent, and collectively the hyperscalers in 2025, which includes the top 10 mega cap stocks, they're investing in AI and OpenAI, are going to spend about 360 billion this year alone. And so that number is going to continue to expand over time because we're marching towards this new automated artificial intelligence age, Liz.
Jeffrey, let me broaden the aperture to the entire market, and we've got the small caps at a record high. We have most of the major indices quite close to records. A little bit of a stumble over the past day. Well, let's say Friday, we saw a stumble. Yesterday, the Dow Jones Industrials saw its biggest swing. It was really impressive because it was way down and then it ended up. So it was a pretty big swing. We're not quite seeing that today. It's hard to look at a couple of days and then decide exactly how the market's going to do by the end of the year. But do you think the Fed cuts interest rates again and that will provide a real tailwind?
I think they will cut rates. I don't think it's going to make a difference on what happens with the market for the rest of the year or the economy. I think the Fed at this stage of the cycle is going to be rather benign. Even if they dropped rates 100 basis points between now and Christmas, it's not going to really impact the markets. The markets right now are pushing the financial valuations and boundaries of reality in terms of where we are. We're really in a 1998 moment now, Liz, where the price to earnings multiple on the S&P is the same as it was in January of 1998 and July of 2003, the dot-com bust. That's the exact same cycle. So that's why the warning bells are going off. And that's one of the reasons why you alluded to the beta that's swinging back and forth in the markets despite the threat of additional tariffs November 1st.
Well, yes, the flaring up of the trade tiff between the U.S. and China is a bit worrisome, but you do have Jay Powell saying yesterday that he raises the expectation that more interest rate cuts are on the way. So that's why I brought that up. What's your side window trade as far as sectors are concerned?
As far as sectors are concerned right now, I think that the broader market is tremendously overvalued, in my opinion, more so than the big tech value is in terms of the top 10 mega cap stocks. And so I prefer to lean in the tech direction at this stage. because they're all growing at double digits. If we look at the most recent quarter, Liz, 26% year-over-year growth in earnings for the Magnificent Seven, 6% growth for the broader market. So I think the broader market has a much larger danger signal flashing at this stage of the cycle.
Well, I'm glad you brought up tariffs, because I will tell you that the highest performer on the S&P is Bunge, and Bunge is a big producer of seed oils. And of course, it was President Trump yesterday who took aim at the soybeans that the Chinese are not buying. And of course, that all brings it back to cooking oils. So we'll be watching all of it. Jeffrey, thank you so very much. Well, let's see if the Dow looks like it's trying so